สวัสดีค่ะ Welcome everyone back. This is the last but not least session for today. The topic will be all-driven innovation in Fintech, building a smarter financial future. Please welcome our moderator, Akin Shah, Global Head of Fintech at GTN. Please give him a warm welcome.
Thank you so much. Hi, everyone. Thank you for coming for today's discussion. We're going to try to keep it as entertaining and as informational as we possibly can. Before we start, I just wanted to take an opportunity to let each of you introduce yourselves. And then we've got some very interesting questions lined up. And hopefully we can get through all of them in the time frame that we have.
Yep. Thank you, Ankit. Very glad to be here on this stage. So my name is Wahad. I am CEO and co-founder of a company called Vergram. So it's the eKYC platform that is leveraging AI from day one. So we provide the KYT, KYB services. So that will be probably it from my side.
Thank you.
Hello, everyone. My name is Kayam. I'm the Chief Investment Officer and a partner at CreditLink.ai. We are a technology infrastructure company, and we enable B2B platforms to become lenders by adding a embedded lending product on their platform. Thank you.
Thanks, Kaya. And James?
Hello, yep, this is on. My name's James Perry Keane, otherwise known as PK. I'm head of strategic partnerships at Pepperstone. We're a multi-asset OTC broker based in Melbourne, 13 years heritage, licensed in 7 countries, and really happy to be on the panel. Thanks very much for inviting us, Ankit.
Thank you. If you don't mind me, I'm going to address you as PK throughout the discussion today. All right. So, we have seen a lot of growth in the AI space, a lot of growth in fintech. We've heard a lot of buzzwords around this: super apps, fintechs, AI. And one of the things that we kind of really wanted to discuss today was embedded finance, right? So my first question, and I guess I'm going to keep it open for all of you to just take this discussion forward. Can you tell me how you have either experienced or delivered embedded finance and used AI to help grow your business? So, I mean, each of you have a very specific, unique expertise. And, maybe it's more from the KYC, from the onboarding, from trading, from lending, etc. But just give us some insights on how you've been able to embed solutions inside different partners or within your own app. Maybe we can start with you, Akhil.
Yeah, thank you, Ankit. Very interesting question. So um, it's a very interesting period for embedded finance because we see that the old-fashioned business is transforming, and the biggest industry players like Grab, like Uber, like I don't know, other you name it, they are trying to embed a lot of things. For example, ecom is providing BNPL services. They also like I don't know, ticketing service try to sell you insurance, and a lot of things is happening, and a lot of things is embedding regarding to finance. So it's what concern to us. We see that with developing of embedded finance, it's also there is a demand for services like ours. I mean the eKYC, because at some point the marketplace, e-commerce platforms, or other super app, they need to somehow understand is this person is real. Can I take his money? Is he's a legit? And they asking for our services, eKYC. From that perspective, we love embedded finance. We love how they are developing, and it's quite a lot of things that will happen.
So, sorry, I just want to ask you one more question on this. You mentioned certain apps which are more towards the ride-hailing side, right? Grab and Gojek and etc. Do you see a future where they could actually embed solutions like, and I guess this is going to also pass down over to you, which is on the lending side and investing and etc. And is that where you're seeing the eKYC really playing in? Or do you think it's going to be also for the existing business that they have?
I think that understanding of digital onboarding and what's the digital, how to say, identity is also changing with embedding new technologies, with embedding finances, and probably the new step, we also evolving with them, and we're really considering that we see probably one day will be that you will have your own digital identity, only once, and you just provide the access, you grant the access to Grab, Uber, other big names, and they can use it and provide you like additional information. They can verify you somehow, like kind of that stuff. This is very, how to say, this is maybe not in 5 years, but maybe in 10, 15. We see.
That's super interesting. So one digital identity to get access to actually get onboarded and get access. That could be super interesting.
Sure, and you will hold it, and nobody will get it. Nobody can resell it. You just grant it, and you will take the advantage of your identity all the way.
Nice. Kaya, what's your thought on this particular piece?
So firstly, what is embedded finance? It's a fancy term, EMFI as it's called these days. It's basically a financial product placed into non-financial product or a user journey. And it's actually been around for a long time. Think about payments, right? Every e-commerce site has some sort of payment option now. This is embedded finance. When you book your flights, you automatically get offered to buy an insurance as well. This is embedded finance. But now we are seeing more and more verticals, such as lending becoming embedded finance, and maybe also wealth management becoming embedded finance. So we have focused on the lending vertical. There are a number of B2B platforms everywhere in the world. In Asia, Southeast Asia, they're mushrooming. You see every day new procurement platforms, new supply chain platforms. But if you want to have some sort of credit to transact on that B2B platform, automatically your user journey is broken. You have to go to a credit provider. And now B2B platforms are starting to realize we don't want to let that user go. We want them to maintain in our user journey. So that's where we come in. We partner with multiple B2B platforms. We are live in a number of countries. What we have done is offered an outsourced credit solution. We do everything from credit underwriting, risk management, collections. We provide the capital. And for the B2B platform, there's an obvious benefit, right? The user is never going to leave your journey. Plus, you're going to have the stickiness. You're going to have the revenue share as well. So I see the embedded finance and lending becoming much more mainstream. In fact, we can already see it on apps such as Grab. They are testing this in certain markets and to certain clients. So I think embedded finance and the lending, that will be the next wave of fintech financing, if you will be focusing on this vertical.
Yeah, I tend to actually agree with you on this. I would say controlling the user journey is super, super important. And that brings us to James. James, if you can tell me what your view is on this piece. I'm pretty sure I know that you guys have had some really good experience with embedding financial products. So if you can give us a little bit of insight on that.
Thanks, Anka. Before I do, I just want to ask for a show of hands for the panelists who lives in Singapore. I would have guessed so, because the idea of one digital identifier is actually beautiful, but you get so much pushback from somewhere like Australia. Whereas in Singapore, you're used to that. You've got your tax ID and it does everything for you. I'm managing about 973 different passwords. It's horrible. I would love the idea. We've now got one student number in Australia, which is an international identifier that follows you around. I love the idea. So I digress. So Anka, you're talking about our TradingView integration, which has been a great success. I think Kaya's point about digital integration and stickiness is a big one for me. It's almost a dichotomy. So actually, there's three parts to it. You're reducing friction to create stickiness. And then within that, you're also permitting diversification as well. So you're moving beyond your vertical. And so I look at it, it starts at a sort of a strategic, holistic view of a customer journey where you've got the onboarding from when a client hears about you, when they come to you for the first time, when you offer them something for the first time, when they accept that offer, all the way through there. Then you've got to identify them. So you've integrated your electronic ID verification, your address verification. All of these points are where you can have sort of leakage in the conversion funnel, we call it. So as much of this as you can automate and embed through APIs and what have you, the smoother the journey is. And then you're on platform. You've got your account, you've got your trading, you're trading away, but then you've also got other things that keep you on that platform. So again, we use the idea of the example of TradingView. We integrated our application form in TradingView. It's a charting package, so it feels like a natural place to find investing and trading. But then it's also a community and a social community of 35 million users. And so we want people to stay on there and basically grow from there. So it's been really successful, but a lot of it has been based on the embedded finance.
That's interesting. I mean, so basically, in some sense, that also is saying that controlling the user journey on your own app may not always be a necessity. Also, letting the user journey be controlled on a third-party app where you embed your service can actually be very, very meaningful as well. But you mentioned one very interesting point, and this is on onboarding, right? And you also spoke about eKYC, which kind of brings me to my next question. And we are all, everyone's hearing about AI and ChatGPT and, how AI is going to kind of rule the world. But let's face certain realities, right? There are risks. And when you are effectively getting onboarded and you're using AI for that kind of onboarding, how do you ensure data privacy? How do you ensure that that client's data is not, being leaked out, not being shared in any way? What are the kind of walls that you need to create to kind of keep your systems in place and make sure that everything stays within that framework? So, I mean, again, please feel free to start, whoever wants to kick off that.
I mean, from our perspective, we cheat a little bit, if I can put it in such a way, because we work with platforms that already have customers onboarded. We don't really have to do KYC anymore. We take already what's available on the platform. And often when these are, let's say, payment processors, they are regulated companies, meaning they have done very thorough KYC. But to answer your question, I mean, I guess knowledge, experience are important, meaning that users also have to know what type of information they give, understanding what are the repercussions when they give that information out. ChatGPT is a great example. We discussed this. Everything you put on ChatGPT is a public information. You should never put any personal information on ChatGPT. No company names, no passport numbers, none of that.
It's not just limited to ChatGPT, it's any
it's any, absolutely.
Yeah.
But people just know ChatGPT the most.
Yep.
But I would also say, when we talk about AI as such, obviously training that AI, that algorithm is absolutely paramount. So when you start training your AI from let's say, company or provider perspective, you have to make sure the data you work with is quality data. And we can talk about that later, what that means.
Awesome.
The quality data is the most important part, isn't it? So I also love your point about outsourcing the KYC. So we've done that in some circumstances as well, where we've had partnerships with other regulated brokers, often banks. And so you're actually relying on their internal systems. And again, it's reducing that friction for the user. And again, that's another example where we're embedding our services in third parties. Back to the data privacy part of it, everyone wants to use generative AI to reduce menial tasks and also to get things done quickly. Think about translations of comms and things like that. But Kaya's point about the sensitivity of some of this information, I had a specific example in the last week where we had to send a cease and desist to a group of clients. And we were just going to put it in, it was going to be in simplified Chinese. We were just going to put it in there, and we weren't going to have any personally identifiable information in there, but it's quite sensitive still, and it's sensitive for the business as well. And so we ended up having to translate it manually just because of that risk. And it wasn't even personal privacy data, it's just sensitivity, and you just don't know where that could end up.
Yeah, from our perspective, is we are processing a lot of data of doing the digital onboarding. So we try to comply with ISO standards, SOC 2. And it's kind of hard because we see that some countries like U.S. or European unions, they had a very hard legislation, and we see that I don't know, big names they providing the KYC services. They having the problem with legislation. I know, for example, at least 5 cases that was like filed, and I'm not sure about the ending. It's still like coming, but the consequences of that, the every lawsuit costs you like millions, like maybe 10 million. So from our perspective, yeah, so you need to put a lot of efforts to comply. You need to put a lot of not only from a technical perspective, but also from legislation, and it's kind of hard part.
So one question that I have, it's kind of a, I would say, a top up to this one, right? So we did, in the first question we spoke about a single digital identity. In the second question we have spoken about the fact that data privacy is important. What are your views on, things like SingPass, CKYC in India, where as of today that in some countries that single digital identity does exist, uh, you do need to have a local regulated entity to be able to ping that service, call for that API, and be able to, call that client data. My only question for you is that, do you see that that data is well protected as of today?
I don't know. I have a technical background, so I know a lot of guys who are very keen in technology. So I know that there's all saying that if something was done by one human, could be could be broken by another one. So it's very hard question.
All right.
Yeah.
So let's move on to the next question. I guess this is a little bit more open ended. So, in what areas of fintech do you see AI making the most significant impact as of today? And how is your company independently kind of contributing to these different areas in the fintech space with AI? James.
I'll try to answer that one. So again, talking about the conversion journey and what we're doing to try to streamline that as much as possible to get people on the platform as soon as possible. Identifying where clients are from, serving them the right thing. If it's a case where we can outsource the KYC, recognizing that it's almost a decision tree that's happening in the background through the AI. Another part of our business is we facilitate a lot of AE trading. It's EA trading, expert advisors. So these are robots that clients have programmed to trade on our MetaTrader servers. Very, very popular with our client base. And in a lot of cases, those particular trading robots use machine learning to improve, and they learn in the markets, and past performance is no indication of future performance, but they recognize trends and almost look around corners, these bots. So it's something that we do quite a lot of. And as we build out our API capability, we're seeing more sophisticated AI models being built. And it almost leads to another question around when will the robots take over the world? And I'm sure we'll get to that elephant in the room, but they can almost be self-fulfilling prophecies, because they can end up having market impact and they can drive volumes in certain directions. So there's a lot of opportunity there for our clients and for our business. But at the same time, there's massive amounts of risk, not just for the clients, as there is in any trading, but also for the business and also for the broader market stability. If these bots all gather up and draw arms and do a bit of Will Smith on us or something like that. So if they're all going in the same direction, there's going to have market impact. So we use them a lot, but we're really very cautiously proceeding at this stage.
Interesting. Guy?
I would say that a major use case for AI and a massive trend, obviously, is risk management and fraud detection. And this is where we also use AI, because AI allows to process vast amount of data within seconds. You can really process data that obviously is clean already and is diverse and is quality, and find patterns and find anomalies. way we use it is we basically take, let's call it alternative data in credit analysis, meaning that we don't look at balance sheets, we don't look at financial statements. We use transactional data, settlement data, refunds. We use natural language processing to take reviews, for instance, and we build predictive credit models based on those data points. That really allows us to actually predict even certain trends. For instance, in Singapore, we started seeing customer behavior slowing down in December 2022, and we work with businesses, right? We saw their repayments from clients were getting slower and slower. They were behind. So we predicted, okay, Singapore probably is going to have economic slowdown, and we are in technical recession in Singapore now. So that's one use case or one example I can give you how certain data points that are generally not used actually can help to have some sort of forward-looking scenario analysis, what's going to happen.
Did you trade it?
No, we didn't.
Should open an
It's
account.
insider training, lah. Cannot.
No, that's super interesting. I mean, what I do remember reading somewhere was there was a firm, and sorry, we're gonna come to you, Akat, but just this is something I want to say, that where there was a bug in the code and they fed it into an AI, and the AI actually caught the bug, but the problem was the AI also got the entire code, right? So you have to be extremely careful as you're building this, using AI. Wakat.
Yeah, sure. Yeah, so I just want to add another, like, I don't know, not maybe business stuff, but technical stuff. As we're a company that from day one was excited with AI, we are started to use that stuff from 2016. And that day was probably the first wave of AI. So this is I think generative AI is the second big wave. And we are served very good. So we see how it's evolving. We see how a lot of people are seeing more and more thing that is at your mobile phone, at your home, the thing that you're using every day. It's helping you to write emails. So it's almost so there's a lot of things. From our perspective, we see, for example, that very hard technologies could be done with AI, and it's much, much better than it was 20 years ago. And I don't know, it's faster, it's more precise. So for example, Kaya said about analyzing and doing a big amount of data, and we also do that for our know your transaction processing. So it's the numbers right now for financial transactions. It's huge, and none of the risk department can do that with their hands or rule-based stuff. So it's kind of outdated. That's why you definitely need some machine learning, deep learning stuff. So yeah, it's cool.
Nice. I guess, while we speak about fintechs, AI, embedded finance, the one reality today is that we are going through somewhat a VC funding winter, right? And that's the term that everyone's been using, which is there is a dry up of new funds for these fintechs to kind of go out and raise. One of the challenges that I think that exists over here is the fact that when a VC funding winter comes in, right, there are a lot of fintechs that have really good products and they need the fuel to continue to grow. So, what are your thoughts on this? What are your suggestions? Are you seeing solutions to solve this problem? Maybe working with regulators, etc. Kaya, maybe we can start with you, and if you can give us your insight on that.
Oh, sure. So obviously, from a company's perspective, the obvious thing to do is to optimize your operations, cut your costs, and diversify your revenues. How to diversify revenues? Maybe add a new product, maybe add embedded lending, maybe add embedded finance. Maybe that will allow you to have some sort of revenue share. But coming to your regulator's point, we do see in Singapore MAS becoming increasingly active in terms of making sure there is financing available for startup companies. You have multiple grants. Getting the grants is not an easy path. Trust me, been there, done that. But once you get the money, it's yours, right? You don't have to pay it back. So I think regulators are actively stepping in. They want to make sure that if you have any new product being developed, especially within the AI machine learning space, this is done in an ethical manner, and they do want to have some sort of control over that.
That's interesting. James, do you have any comments on this?
Yeah, it's interesting. If I'm sure everyone saw the coverage over the last few weeks about Senate hearing committees in the US and how Google and Microsoft and Meta are coming out and really, I don't think it's even lip service. I think they're genuinely antagonizing for self-regulation or regulation in the industry itself. And a big part of that's going to come down to where the money comes from. Yep. So if you think about the risks involved here, the robots aren't going to take over the world yet, and they rely on human control to an element, to some regard. There will be bad actors out there who are trying to militarize and trying to do things with AI and machine learning, which increases the risk. And so I think it's in everyone's best interest for the governments and the regulators to step in and help drive this innovation, because it will certainly, I hate to use the phrase again, but to weaponize the technology, at least there's an opportunity for it to be in good hands. Not identifying anyone specifically as a bad actor, but I think there has to be an element of regulation, and it still has to be paid for. So that's how I would see the impact of the VC winter.
That's interesting. Wakat, what's your view on this?
Yeah. So the first part about what should you do, where you should find some fuel. So yeah. So as a company who fundraised and having some like VCs on the board, it's definitely a hard time because I'm speaking to some VC companies and mostly all of them, they are right now concentrated on their portfolio companies, and they are not interested to, like, I don't know, largely scale or like have another companies. Most of the VCs, so they had previous money and they are trying to spend it very carefully. Another trend, they also, how to say exactly, so they are also advising to work better with your current clients, not to rush for new ones, try to sell extra services, try to add another functionality. And yeah, if and they are saying also, like, if you're like previously raised 3x a year, maybe more, so the new normal is 2x, and they are very happy if you have those numbers, like cut it maybe 30%. And at the end, if that won't go well, probably, yeah, you will have less valued. Probably you will need to cut some costs. For this is how you should probably, I don't know, and negotiate with your VC if you have like VC money. For another part of taking finance from government, sure, I think that it's a for example, for AI, right now I think it's a golden age, and a lot of not only companies or VCs, but also governments are stepping in. They are trying to provide you some additional finances, some advising, and you should definitely look at that path. If you do some ethical AI, if you do very interesting financial products or something, I think you'll definitely will have a helping hand from them.
I'll just add one point. I mean, the money hasn't gone anywhere. I mean, VCs are still sitting on dry powder. Funds are still being closed. Those funds have to be deployed within certain number of months. Otherwise, the LPs are going to pull the money out of the funds. So meaning money is there, it's available. But I think fintech companies just need to build a better case in order to raise capital. Profitability, I think, will become increasingly important. Revenue is obvious these days, right? You can't raise any money if you don't have any revenue. Profitability is becoming increasingly important. But I think having seen and heard whispers on the market that some of huge companies that have had excessive valuations can't get their subsequent rounds closed, to be honest, that's a bit scary, meaning that there is definitely winter out there. The pressure is on the companies. And if I was a founder, I'm not sure if I wanted to launch my company in 2023. Maybe I would wait. Maybe I would take a year in Thailand, live in Phuket, and then start my company next year.
Sorry, Kai, just on that one, on the valuation. So there was so much cheap money out there. Yes, the money's got to be deployed, but was it completely mispriced? So at what cost do you deploy the money? That's
I just want to say one thing. On a good note and on a positive note, today morning I read news of two guys who were I think they were from one of the big tech firms, and they just raised 100+ million by just presenting a simple plan. And from my perspective, that was, maybe we are in a funding winter, but what's happening is, everyone's become a lot more picky and choosy, right? So, and that kind of makes sense, which is why, cheap money is not there any longer. Money has become more expensive because of the interest rates that we're at today.
Adam Newman also raised a lot of money for his second company, right? After going down with WeWork, valuation coming down for 48 billion to what, 8 billion or something, him being pushed out by SoftBank, and he still raised 100-something million, I think, from, yeah. So the point being, yeah, money is there. If you have the background and experience, you're probably able to raise, but as a completely fresh founder, I think it's difficult. Unless you're in the AI space, of course, then money is available again.
Absolutely. All right, so let's, just to be conscious of time, the last question that I think we're going to ask today is, should companies start investing in employees to get trained to be able to deal with AI? Should they do it now? Should they do it in the future? Or, is it really very, very industry based, etc.? Wakat, maybe if you could give your insights.
Sure. I think that AI is another very powerful tool for like as a professional that you use as same as like I don't know, 30 years ago, like you started to use Excel, PowerPoint, that stuff. So you should like inject softly, and when you will give that additional tools to your like teammates, to your like founders, they will definitely will give better output. The output will be probably like, I don't know, expanded, and you will have, you as a company even be more competitive, because you will see something that from for example your competition haven't seen with these tools. So yeah, sure, we embrace our teammates, my colleagues, to use that tools to try to like create something new. So we're doing like hackathons where anything that could like add some additional value. Sure, there should be you should put it more, I think so.
I also heard that there are some companies that are mandating how to, knowing how to use things like Chat GPT and Bard are becoming a basic requirement for jobs as of today. But Kaya, if you could give us your insights.
Yeah. So when is the best time to start teaching your employees about AI? I'm gonna use Chinese proverb. The best time to plant a tree was yesterday. The second best time is today. So point being, as you pointed out, generative AI was around in 2016. I didn't know about that. Nobody told me. But point being, I think companies who have started already training employees probably are slightly ahead of the curve. Nevertheless, it's not too late now. Upskilling your employees, obviously, it's a good thing. All the companies should think, how can we increase output? That's the ultimate goal, right? How can we increase output? The only way to do that, either you increase your input, which is going to increase your cost, or you're going to increase your productivity. So I think productivity increase is the focus from a company's perspective, from a country's perspective, and generative AI, as well as other forms of AI, I think are brilliant to achieve that goal.
Interesting, James.
Um, I love the proverb, and I totally agree. And I think we've talked a lot about the risks today, and so that's got to sort of underpin a lot of the training. We've got to make sure that people understand the precautions they should take and the risks that are prevalent in the system. The other part of this is sort of employee well-being and CSR, because I think there is a lot of fear out there as well from employees. There was a recent survey in Australia where 45% of respondents said they feared for the future of their job with generative AI coming along. In the same survey, 65% of respondents said that they were looking forward to handing over some menial tasks to a robot. So just be careful what you wish for, I think is the key thing. And there was also in the same article I was reading, it talked about how 60% of jobs that the world's population do today did not exist 80 years ago. And if you think back again, you know, a fairly recent revolution similar to the age of machine learning, it's the Industrial Revolution 150 odd years ago, but you know, jobs certainly evolved after that. And then you consider that only 80 years ago, only 40% of the jobs that we do today existed. So there is a lot of concern and a lot of well-being for employees out there. So training them up and making sure they're comfortable using the technology is absolutely integral to our execution going forward.
I will add something. I think it's not only the company's responsibility. I think the government should also step in. And again, using Singapore as an example, Singapore government has, I shall call it a plan or sort of a committee that ensures those employees who are being let go. Let's say there is some company who's doing a massive layoffs. These employees must be retrained at the expense of the government, and then they have to be sort of placed into new companies. So when we as a company are looking for a new headcount, we work with certain organizations in Singapore that help us to find a suitable replacement, right? And the person may not have the right background, but at least the government pays for the training program. And I think it's a brilliant initiative. I wish that other countries would take note of that, because I observe what my home country, Estonia, is doing. Yeah, sure, you can have a course the government will pay for. It's a photography course. What's the point of that? Maybe something that's a bit more usable and applicable, right?
Right. I mean, the the only thing I would say is that there is a lot of fear of you know, people losing jobs, but I think we have to be realistic too, right? The world has gone through multiple revolutions, and as human beings, as a human race, we have always come out on the better side, which effectively, from my perspective, I would say that this actually will help us to grow as we progress further, and I think eventually AI is just going to become a part of our day-to-day life, right? But thank you all for attending today's session. I just wanted to open up the floor. We have like a minute and a half to 2 minutes left in case anybody has a question. Yes, please.
My name is Chand. I'm coming from India. I'm a content writer and an advocate. The proverb, what she had said, is really very nice, that the training should have been the best time is yesterday, and today is the second best time. That reminds me an old quote which I have seen in one of the offices, where it is written that in this office, everything is expected yesterday. If you want something to happen today, please come tomorrow.
Love that. Thank
All
you
right.
so much.
Thank you so much.